if I go to my Bloomberg terminal and I look at what has worked from a style standpoint the last 10 years, value, growth, dividends, what's worked according to your Bloomberg? It is momentum number one and revisions number two. Long down the list is things like dividends, quality, value, growth. It is momentum and revisions. And the reality of the market is that earnings, i.e. revisions, are very strong right now because the economy, for all the talk, earnings have come in better than what really Wall Street thought, certainly since April, but even since the beginning of the year. And so at the end of the day, it's a long-winded way of saying stocks move with the second derivative, which is earnings revisions, because stock prices embed today expectations of the future. You don't buy a stock based on what's happened in the past. You buy it based on the future. And if the future looks better than what is expected, stock prices go up. And if it's worse, Tom, in other words, since I've been in this business, stocks don't go up for long when companies are telling you business is as good as expected. So what gives me faith is I see a positive backdrop for earnings.
Bottle it. That's the single best idea today. Just wonderful, Andrew.
Andrew, I guess we're entering, what is the fourth year of this current bull market here? So I'm sure you get the questions, how much longer does this thing go? What needs to work to continue this bull market? What do you tell folks these days?
Well, certainly earnings have to keep going. The market's not cheap at 22 times earnings, but I push back a little bit on that for two reasons. Number one is, the dynamics of what comprise the S&P today is far more profitable. Companies are far more profitable than in the past. So versus average is a little misleading. And number two is, again, valuations are only as powerful as the denominator, which is the estimate, and that's turned out to be too low. So I think there's a good backdrop for equities in the fourth year. What's fascinating is, Paul, if a bull market makes it to the fourth year, now a bull market ends when you have a 20% pullback, which we haven't had. Every time the S&P has made it to the fourth year, it's gone up in the fourth year. It's never had a down year. So that's pretty powerful perspective for equities.
Andrew, 2 years ago, nice quote from you here. Quote, "Why should I buy equities when I can lock in a 5% risk-free yield?" Discuss.
Oh, my argument, Tom, is the stock market is following a classic behavioral path, which is, unfortunately, the only consistency of this business, and this, Tom, as well as I do, is people sell low and they buy high. It's the only market I know where when prices go down, people want to sell.
Right. Well, you just described my investment strategy.
Exactly. Well, it's triple long cash, whatever you have. But look, in 2023, we had just come off a 25% decline. It was a wonderful opportunity to buy stocks, but the reason why we had a 25% decline was the Fed was raising rates. So suddenly, now short-term rates look attractive.